So I looked at BTC earlier today. Let's take a look at some ETH charts here for Brave New Coin. I trade both on Enzyme.finance. You can check that out in the description of the video below. Non-custodial portfolio management tool, where you can see all the trades I'm doing. I'm basically like Kathy Wood here, out here slinging BTC and ETH, and you can see when and where I'm slinging it. And I'll give you some of my rationale as to what I'm doing with that fund here. So we'll start with the fundamental stuff. Like I always look at things that to most people is probably boring if you're not abreast of the situation. If you're abreast of the situation, then you'd see that hash rate and difficulty have hit multiple all-time highs here for ETH for two reasons. One, price is up to a parabolic degree, and two, fees, obviously. Unless you've been living under a rock, you realize that fees are at all-time highs and essentially crushing the transaction activity, transactional momentum on the network. But for miners, they're fat and happy. They don't care. They are making more money than they've ever made, realistically, because of a combination of high fees and high ETH price. If we look at just the ASICs here, now, unlike BTC, GPU mining for ETH is actually super profitable. And you'll know this if you are like me, have two intersections to your life, gaming, computer gaming, and cryptocurrencies, because if you've tried to get a new GPU lately at MSRP at retail, you've realized quickly that they are either gone or sold out for months and months and months. And a big part of that is the boon in ETH mining. So this is just ASICs here at 4 cents per kilowatt hour, but you can see how profitable they are. Even the older ones in 2018 are barely profitable, but they're still profitable. And despite ETH flipping to proof of stake eventually, within the next 2 years most likely, there's still a new miner, a new ASIC being created because there's really market demand for it, right? So if I'm in a silicon and I see what's going on, I'm pumping out as many of these as fast as I can. If you're going to sell the shovels, right, and people are still digging, not realizing that, maybe this won't last forever, which it won't, because they're switching to proof of stake. It's definitely an interesting situation there. If you look at the total gas limit, which can be raised periodically based on miner voting, essentially, it continues to go up. ETH, I view it as the block size debate, basically. At the end of the day, ETH, just like BTC, needs a SegWit type thing. They need layer 2, they need transaction batching, they need better Uniswap transactions, all that stuff, because it's untenable. It's not going to last. It's just killing the network. It's forcing people elsewhere. If it costs $1,000 to transact, $1,000 US to transact, then that's going to prevent a lot of microtransactions. Stuff you've all heard before, but you can very, very clearly see that in the metrics here. So gas ceiling is still maxed, definitely. Something else worth taking a look at is EIP 1559. This is an article from David Hoffman, October 2019. There's newer articles about this. This one's from Gemini, just put out a couple days ago. It changes the monetary policy. It changes how much miners get paid, which at the end of the day might help the fee pressure, in a sense that we're not giving a bunch of money to a bunch of people who are just probably going to sell it anyway. It's also reducing the amount miners get paid. So there's a lot of things that this is doing. What this isn't doing is answering the issues of high fees. It just isn't going to help from my understanding. But give it a read. Let me know what you think in the comments. But yeah, I don't think EIP 1559 is going to really fix the fee issues in the near term. Speaking of ETH 2.0, again, here's the total value staked in ETH 2.0. Continues to rise. Now it's somewhere around 3.35 million. And it's basically the inverse of ETH ICO treasuries. As ICO treasuries dwindled, market selling increased and price went down. As things like 2.0 ETH contract ETH gets added, I expect to see a positive price reaction, because that's basically a certificate of deposit where those funds can't be moved for quite some time. So they really are locked to some degree. ETH is another thing to watch if the Grayscale fund continues to buy more and more ETH, currently at 3.17 million. So that's 6.5 million, let's say, in total ETH that effectively off the market in the interim and just locked away. Can't influence price in a negative direction, in a bearish direction, just based on supply demand. If you look at transaction counts and average transaction values, Part of this is fee related. As fees go up, average transaction values will go up because it kicks off the microtransactions. It is a little surprising to see transactions per day still as high as they are, with fees as high as they are. So that just tells you how robust the current transactional activity is, because if this was just microtransactions, these values would plummet, right? Because the fees cost more than the transaction. But you're not seeing that. There's certainly a range, it's going up and down, but it's not, dire straits by any sense of the imagination. It's basically at previous all-time highs in 2017. And average transaction values are just as high as they were in 2017. So if ETH can fix the fee problem, transactions should continue to increase. It's kind of like some fluid principle where as soon as we increase capacity, we're going to see increased transactional activity, right? If we look at block counts are currently in the lineup here are effectively at an all-time high per day. ETH inflation is somewhere around 4.3%. Continues to decline slightly, not as low as the previous Ice Age / mix-up where they forgot to take something out and had to do another hard fork later on. But inflation continues to decline slowly over time. And EIP 1559, if that gets introduced, should decrease inflation some more. I mean, I'm not using exact language for any of this stuff because I don't think any of it is exactly clear what's going to happen. This was a perfect example of, we don't know what's going to happen until it happens on ETH. That's really just the bottom line. We can think we know, the devs think they know, but until it goes live and we see what happens, then I'm convinced that that's what's going to happen, because at the end of the day, there's just too many moving parts, really, honestly, to even think about what's going on there. NVT on Ethereum continues to decline, which is an inverse metric of economic utility. So this says that price is extremely bullish, or should be bullish, based on where NVT is here. If you look at it on the monthly, it's almost at a multi-year low, 4-year low there. Active addresses in the fill here at an all-time high or exceeding all-time highs. So again, at least on the monthly basis, on the weekly basis, it's nearing all-time highs, but it's more sustained and sustainable in that it's a week-over-week increase versus a euphoric peak. Everybody's getting in. Who isn't making money on this sort of situation? It's a slow but steady increase, and all of this is related to DEXs, obviously, DEX volumes, NFTs. Any of that stuff is going to have a positive effect on numbers like this. If we look at 30-day DApp volume on DApp Radar, surprised to see DYDX as number one. I suspect Uniswap to be number one, but I'm not really sure if those numbers are legitimate. I'd expect to see more tweet threads about how great DYDX is if it surpassed Uniswap. But in any case, tons and tons of volume on DEXs right now, on DeFi. All this stuff is just saying the same thing over and over again, but lots and lots of activity there. If we look at users, Uniswap with 401,000 users over the past month, 1inch, 50,000 users. So tons of activity here. I don't know how many active users Coinbase has, but I can't imagine it's more than Uniswap at this point. Just tons and tons of activity on DEXs as a whole over the past few months. If we look at total value locked in DeFi, the USD value really is kind of irrelevant to me. If I'm talking about ETH specifically, if I'm talking about DeFi, then TVL and USD makes sense. But for me, again, supply demand, right? Like if I'm bullish ETH, I want to see more and more ETH get locked up. And it's no surprise that this matches price pretty well, considering if we're adding ETH to some platform, that takes it out of the selling pressure temporarily. So to see this rising again is bullish. Maybe they just added a bunch of new projects to DeFi Pulse recently, but using whatever caveats or explainers you want to think about, this is a bullish metric for sure to see us go from 6.8 to 8.8 ETH, 2 million ETH added since January. So we have 6.5 million ETH between ETH 2.0 and Ethi, Grayscale's product, and we have 2.5 million or so ETH added since January in DeFi. This doesn't even include 1inch, by the way, because DeFi Pulse and 1inch don't get along. This does double count some stuff though, so whatever. It is what it is, but the point being it's increasing, and that's what you want to see if you're bullish. If we look at Google Trends for Ethereum real quick, and we look at the past year worldwide, that's definitely at all-time highs. We can zoom way out, look at the past 5 years, definitely at all-time highs. Again, it's predicting a decline over the past week, but this is all what you want to see. If you're seeing on-chain activity rise, you're seeing price rise, all this stuff goes hand in hand. So it's no surprise that we're seeing price at all-time high, transactional activity at all-time high or near all-time high, with Google Trends at all-time high. So just a ton of people looking to get into ETH or looking up ETH or adding ETH to their legacy portfolios, that sort of thing. Moving over to technicals, we have Bitfinex long-short ratio at the top here, yearly pivots, 50, 200 EMA, VPVR, and volume with RSI on the bottom here. So we did have just a continuous bearish divergence with price discovery, which isn't something you want to see if you're super bullish, because we got a decline in RSI and a definite decline in volume here. It's currently hugging the 50 EMA. It's last touched the 200 late last year. Right now, the 200 period moving average and the R1 yearly pivot are both at the psychological support of 1,000. So if for some reason this thing just collapses price-wise, I like that price target. I like 999.99. There's some free alpha for you as far as where my bids will be if we see some mega doom candle. As far as the open interest is concerned, these longs got sold off or claimed. I don't really know the technical specifics on Bitfinex, what's involved there, but we had talked about these a lot during the run up, because the amount of selling or closing the longs notionally that would affect price seemingly had a massive implication, but was not felt on price really whatsoever. So whoever was long from basically the March lows has closed or did close about a month ago. So there's no real long squeeze concern here anymore. Shorts are almost at parity with longs. Okay, maybe longs are 2x shorts, but either way, there's no massive long short squeeze one way or the other. If we look at Cloud, Cloud's been really good at picking up these trends since March, even pre-March, but especially since March. Told you to go long in May, told you to close in September, told you to re-long in October, November, and it's told you to hold the entire time ever since October. So when we get a bearish TK recross above the Cloud, that's the long exit signal for this Cloud system, very similar to October, November. That's what it looked like. Sorry, not October, November, September, October, when we got this bearish TK across above the Cloud. That's your long exit signal. So we haven't quite seen that yet. If you're looking at Cloud exclusively for opens and longs and closes and that sort of thing, it's telling you to sit tight for now. Although on the daily, it doesn't look too promising that we're going to see bullish continuation immediately. Now, this may just go sideways through March. We get this TK cross recross, and in Q2, when the seasonality is on our side, then we see a secondary bullish continuation. I had this on an older chart, but it's interesting. Some months and months ago, early 2020, maybe even January 2020, we were talking about the possibility of this Adam Eve fractal playing out. It got there in a roundabout way, but it's interesting to see how far it's got bought up since then, hitting the 7.618 of basically this high and low. And definitely the case of letting runners run for chart patterns. So when you see a chart pattern on any time frame, it's always best to let some or most of it go between the 1.618 and 2 measured move, and then just hold the rest, because sometimes you really never know, especially on these high time frame chart patterns. This was a multi-year chart pattern, but the higher the time frame, the higher the potential that this just runs, right? Nice little lesson there. Here's the pitchfork that everybody seems to hate. I don't know why, but we have 3 points. We get a rate of change. It suggests that price likes to hug the magnet of the median line here. And when price is above or below, it's overbought or oversold. And right now it's definitely in the overbought camp still. So, 660, 560, that's where the median line is right now. And yeah, I mean, it's just a price, people. It's just a super bearish target on the median line here, but this goes to show you how much this is just parabolically risen since March. Now, do I expect this to seriously go to the median line anytime soon? No, but if we have a multi-month retracement, it will meet that line, certainly. Have no doubt about it. Here's the 4-hour cloud for ETHUSD, and it's been noisy since January 11th, let's say. We had a bunch of consolidation here, a bunch of sad price discovery on the 4-hour, even though the cloud still helped you with that, told you to add here at the Kijun a couple times, and it told you when enough was enough as far as getting out of those long positions. And currently it's showing price below the cloud with bearish metrics. So when this flips bullish again, which it looks like it tried to, it wanted to a few days ago, but just couldn't muster the strength. And that's fine. You know, this just says, just give it some time, right? Just wait. If you're looking for a long, like me, I'm looking at this pretty closely day to day, because as soon as this flips bullish or is close to flipping bullish, then that's go time. This could be setting up for some weird multi-shouldered head and shoulder. Shoulder, shoulder, head, shoulder, shoulder, I don't know. As bearish as this might look right now, as long as we can stay within this previous consolidation, we look okay. I mean, if we just doom candle to 1,000 and bounce, I think it's fine. Anything in the 4 digits is probably fine. The reality is, until the fees are fixed, it's hard. It's a hard pill to swallow to long ETH. It just is. If what got ETH here was the transactional activity, the DeFi, all the nonsense, and that's not happening or happening to a lesser degree, despite what on-chain metrics say, then, you know, if the party's closed, nobody's coming, right? So it's better if we stop pricing people out of the market and they stop going elsewhere if you're bullish ETH, and keep people in the ETH ecosystem. If we look at ETH-BTC, and it's quite a chart. I don't know how anybody, I said this on Twitter the other day, I don't know how anybody trades this and makes money. This is a 3-day cloud. I have to zoom way out, and it's still, the signals are super noisy. But you had this bearish trend from 2018 to 2020 that has flipped bullish / neutral from 2020 through 2021. And you get these really weird like peaks and troughs. You can sort of draw like a expanding, broadening wedge or something. Rising, broadening wedge, sorry. I don't know. You know, I don't really trade this directly, but Cloud is telling you there are no discernible signals here. If we look at the 3-day pitchfork, again, pick 3 points to get a rate of change. This is the median line, so it should bounce at the median line. Down here is oversold, up here is overbought. This is where price wants to be, and you can see that's where it's tried to stay since 2018. So the lows of 2018 were there. In 2019, it sort of mean reverted back to that. So for me, if I'm trading this, I'm looking at some massive high time frame mean reversion target like 021 or 020, something like that. I like 050 as a multi-year target to the upside, just because it's clean and neutral and psychological resistance. There's a lot of people looking at this as well. This is the 1-week ETH-BTC chart showing some sort of head and shoulders monster, inverted head and shoulders monster, where it tried to break above, couldn't, is back in below 035. I don't know. I don't really have anything to say about this chart. I think it's a mess. It'll forever be a mess to me. So let me know what you think about all of this in the comments below. Like, dislike, comment, share, subscribe, and happy trading.